Focus. Ideate. Innovate. Enable.
Hello and welcome to this week's episode of Building It Up with Bertelsmann, where we hold conversations with leaders from the startup community to understand what goes into building, sustaining and scaling a successful business. The theme for today's episode is Building for Enterprises, where we will explore how startups are helping large enterprises reach their consumers faster with a special focus on the banking and logistics industries. We'll also delve into the role that technology plays in disrupting these traditional industries. Today, we'll be joined by leaders from Skeps, which is an innovative blockchain-based lending platform for merchants and lenders. Let's Transport, a platform which enables intracity logistics for large enterprises, and Bertelsmann India Investments, which invests in and partners with pioneering entrepreneurs and companies. Please join me in welcoming our esteemed panelists, Rohit Sood, partner Bertelsmann India Investments, Pushkar Singh, co-founder and CEO Let's Transport, and Tushar Srivastava, co-founder and CEO of Skeps. Gentlemen, welcome to the show. Rohit, let me start with you. We've all seen massive technology-driven consumer companies getting built in India over the last decade. Bertelsmann itself has backed companies like Pepperfry and Licious. At the same time, investments in enterprise-focused tech companies have increased at an unprecedented rate. So Rohit, tell us, as an investor who has backed marquee companies in both domains, how is it different to build a consumer tech company versus an enterprise tech company?
Thank you, Shruti. I think it's a great question to set the discussion off. And as you noticed, we have experiences in both consumer as well as enterprise domain. I think, the way the company starts at the genesis, there are a lot of similarities with the entrepreneurs having a unique insight and a relation to the problem. But pretty much after there, the journeys for consumer and enterprise companies can be very different. And I think there are 2-3 key points to note over here. One, there are several differences which are, apparent to the eye and intuitive in nature. Consumer companies typically find it easier to attract the first few clients. It can be a very painful and excruciating journey for enterprise companies to get their first client, right? In enterprise also, interestingly, the user and the buyer can also be very different. It further tangles the sales cycles and product feedback and so on. The way you build up teams in both the cases can also be very different. So there are a bunch of differences over here in the build-up phase itself, right? But the second point that I would like to make is on the scale-up side, right? And there's an interesting observation over there. Consumer companies typically find the first phase of their scaling slightly easier, right? The journey to 1 to 10 can be easier. Interestingly, they face a critical moment when they are to cross the chasm towards mass, adoption of their product. And that could be a tricky phase. The journey is typically very different for enterprise companies where the first few years could be painful. But once you get the product and the sales right, there could be many years of rewarding growth, right? And we are seeing that across companies. There are several companies in US which is breaking the barrier of $100 billion valuation, right? So that scale of difference is very interesting to note. While there are a lot of differences, as we sit over here, consumer and enterprise will continue to influence each other, and it will be very interesting how it shapes forward.
All right. On that interesting note, Rohit, that you mentioned that both consumer and enterprise will continue to influence each other. Pushkar, let me come to you now. Logistics is one of the biggest challenges facing large enterprises today. It's a challenge you recognized while working in the cookies division of ITC. So take us through first the genesis of Let's Transport. What was the idea back then? How did the co-founders come on board? And what problems are you trying to solve through your business?
I think it did not honestly start with a grand vision of changing the world. To be very honest, it was a very simple insight that I wanted to solve a problem for myself at ITC and trying a management trainee trying to get his job confirmation done with ITC. However, I think during the entire process of immersing oneself into the entire delivery landscape, I gathered a couple of insights, which I felt that was right for disruption in the within city logistics landscape. What it means is moving products from the distributors to retailers or to end consumers like you and I. The challenge with ITC was facing, you do not have large incumbent logistics operators solving for last mile needs, right? And this is about 5 to 6 years ago. As founders, being close to consumers, being close to stakeholders, we did realize that, over the next few years, the landscape would drastically change. Where if you look at as consumers, from 5-day delivery, things have gotten shrunk to 1-day delivery, 2-hour delivery, and now we're talking about 10-minute delivery. And traditional brick and mortar companies are finding it even more harder to kind of live up to the expectation of these consumers that they have. And hence, we started this company wherein we wanted to aggregate individual mini truck owners, and with a simple aim of solving the last mile logistic challenges for brands to reach consumers, distributors much faster, and thereby helping them with their last mile deliveries or replenishing the stock. I think that was the genesis of Let's Transport. With this idea, I reached out to my founders. All three of us are from IIT Kharagpur, and fortunately, all of us resonated on the problem statement. The challenge was most large incumbent logistics operators would not look at last mile as a landscape, largely because it's a penny business. It's a business in which per delivery you're charging about 20 or 40 odd rupees, right? The fact that it's a penny business and can only be disrupted through technology, right? I mean, that was the small, simple insight with which we started building this company out.
Let me now quickly go across to Tushar. There's a rather interesting story behind the genesis of Skeps as well. Tushar, how do you and your co-founder know each other? Tell us what triggered you to build Skeps.
Yes, so we know our co-founders very well. So Prerit is my brother, and Mayank we both know since school days. And it also happened to be that Mayank and Prerit have been the batchmates at IIT Kharagpur. So it just happened that somewhere in 2016, again, we were focusing on some technology where we need to place bet on, and artificial intelligence and blockchain were almost two technology which have arrived at the scene and were getting a lot of traction, but no enterprise use cases, particularly in blockchain.
Absolutely.
So we started getting familiarity with that technology in general. And it just so happened that at the same time, like I have a 15 years experience in the financial services, and there was some startling challenges in that how financing is delivered or credit is delivered to the consumer with regards to the friction. And that's where our familiarity with the problem statement and with the technology like blockchain, we found a very interesting merger between the two, that if we can use this technology, we can actually address it. And that's how the idea of Skeps born. We started building the platform. And again, as Rohit pointed out, it was an enterprise solution.
Sure.
So we took our time to design a solution which can fit into the enterprise, which bank can adopt. And that's where the journey started. It took us good 2 years to build a platform, but then we finally knocked on the doors of enterprises and we got a huge reception. And since that we have a successful story.
Yes, you got a good reception, and we'll definitely look into the business model a little later. But let me, go to your common investor, that is Rohit. Bertelsmann surely walks the talk when it comes to partnering with pioneering entrepreneurs and companies to create leaders of tomorrow. But Rohit, what drove BII to invest in both Skeps and Let's Transport?
When we met Let's Transport as well as Skeps, we saw a lot of things that rhymed very, very well with our investment philosophy. Like first and foremost, every entrepreneur has a very unique vantage point to a specific problem that they encounter, and they come up with unique insights. We have already heard from Pushkar and Tushar, how they and their founders had unique insights into the kind of industries that they were taking on. So that was a big check.
Okay.
Is customer love, right? And I don't use it lightly, because when you speak to enterprise clients, it is not easy to find the feedback that we found in both these cases. Thirdly, I would also say, as far as, our investment thesis is concerned, data plays a very central role over there. In both these companies, if you peel the onion, you will see that everything that is enabled over here and everything that will give us opportunities to build the products of tomorrow is all data driven, right? In both the cases, and we can go into details later. And finally, we also look at, we come in an early growth stage. And as compared to early stage investing, one of the advantages that we have is we get to see the kind of, talent that the founders have attracted outside of their, networks and circle.
Yeah.
Usually, it has a correlation with the storytelling capability of founders. And we have seen that that's a very good indicator of things to come. So I think there were a lot of things that checked, and it was easy decision in the end. And we are thankful that they actually also chose to partner with us.
All right, all right. On that positive note, Pushkar, let me come back to you. Tell me, what does it take to build software products for large enterprises, especially in a sector like logistics, where only 10 to 15% is organized? And, what has Let's Transport done differently to become a market leader?
I think it's the right question, Shruti. Sudarshan, our co-founder who builds the entire product charter for us, the deep insight which came in was, if you look at historically, right, enterprise products are built where your buyer as well as the user is essentially an enterprise person himself, right? And hence everything is customized, designed to what an enterprise typically wants. So I think what has drastically changed is most successful product companies today keep users at the heart of it, right? Which means eventually it's the user who is trucker in our case. If he's enjoying the product, if he's actually deriving value out of it, you start seeing more value being pushed to an enterprise. And that's when you crank the flywheel where an enterprise starts seeing a virtuous cycle of benefits coming into, and then they start demanding more solutions to their business problems rather than demanding features from an enterprise software company, right?
Yes.
I think we partner with them as we ask for their business problems and use cases, and then design product features keeping the trucker in mind. I think that inversion of pyramid is essentially what's helped us, I would say, crack or rather scratch the surface.
Let's now understand Skeps a little more. As a blockchain platform, Skeps is targeting the POS financing marketing by connecting lenders with their customers directly at the point of need in a secure manner. Now, for the benefit of our viewers, if you could share more details on the entire lending process, especially data security, and how does it redefine consumer finance?
If you think from a financial point of view or a lending product point of view, they are just a tool for you to facilitate either any large transaction which you're trying to complete. It could be as large as trying to buy a home, very typical mortgage, or it could be as trivial as trying to buy a furniture or a sofa set or book a vacation for yourself, right? And you may need a short-term need of a capital. Now, the landscape is changing, that the consumer are demanding that can they have this kind of an availability right at the moment or at the time of the need, when they are thinking about it, when they are planning about it, can bank come, rather than keeping financing and purchase as two separate journey. The need of the hour is to combine them together, right? So when you are thinking about it, financing should be ubiquitous to it in that thought process. So that's the idea around it. Now, when you think about that, okay, how to merge these two journeys together, where you're trying to book an airline ticket, but the financing is available to you right at that time. That is where we are coming up with this technology to make that availability. So if you have a relationship with HDFC or ICICI or Chase or Amex of the world, at the time of the purchase, can they raise their hand where you are trying and say that, look, we got you covered and we have a product for you.
Well, on that note, it's time for us to slip into a short break on this special episode of Building It Up with Bertelsmann. Stay tuned. We'll be right back. Welcome back. You're watching Building It Up with Bertelsmann, where we are in conversation with Rohit Sood, partner Bertelsmann India Investments, Pushkar Singh, co-founder and CEO Let's Transport, and Tushar Srivastava, co-founder and CEO Skeps. Now, I want to ask this question to both Pushkar and Tushar. Banking and logistics are two of the oldest industries. As leaders in these respective spaces, I would like to ask the both of you, how do you tackle inertia and get firms to adopt technology? Of course, adoption of technology has become more relevant than ever today. Yet, what are some of the challenges you face in onboarding clients, and how do you overcome them? So, Pushkar, why don't you go first?
Absolutely. I think it's a very interesting question, and I would relate it to one of my earlier clients. One of our earlier clients was one of the leading e-commerce companies. And, the idea was to kind of help them digitize their supply chain. So they did, kind of want to experiment with us on a smaller geography with us. The only thing was, they said, my neck is on a sword, and, please just don't let us down. Okay. And I think back in the day, that was how we got the first client, where the entire team, me, Prateek and Sumit, who leads operations for us, they were essentially on the ground looking at what's going to happen, right? And eventually, what we did understand, that truckers as a community is a little precarious, right? I mean, the timeliness, the timelines to it, the SLAs to it, while you overlay with the technology sense, you still have to render those services. And I remember in our earlier first or second day, we actually slipped on one of our delivery timelines. Okay. And what it did was, we started calling and proactively informing clients that, this is what's going to happen. Now, while it was a very naive step or a gesture, what it did lead was, one, to get trust of an enterprise, and then we productized this entire thing into predictive failure monitoring, right? Which meant clients today, even 1 hour ahead, would know what's going to happen to their deliveries. And I think these features, these instances that we have experienced in the past, essentially builds the trust when you consistently keep delivering on the promises that you've made with them, and be very frank with enterprises, right? So while it's always difficult to get the first enterprise on board, but as long as you're delivering to promised value, and you do not have to kind of overstate, right? You do not have to overpromise.
Yeah.
As long as you're consistent with it, it is a virtuous cycle where you start seeing demand stacking up, right? So as Rohit rightly said, today, most of our growth is coming from our repeat business. About 90% of it is from repeat businesses.
Okay.
As we scale up geographies, as we open up newer products, and people just love us and kind of engage with us. So that's a short story. Yeah, absolutely.
Yeah, very interesting story. And 90% of your business is from repeat clients. That's great. So clearly, staying true to your clients and being transparent has definitely paid off for you. Tushar, take us through some of the challenges that you faced while onboarding clients.
One thing is that when you deal with the enterprise, the first thing is that you have to respect that there's enterprise are there for a reason, right? And when I say for a reason, is that you have to respect their processes. They are more compliant, they are more robust, and there are more checks and balances built in because they have a very long, stable infrastructure, right? And it does serve consumer right. Now, people can point that, like fintechs or other people can serve them better, but the idea is that they are more reliable, they are more stable, and they are more consumer friendly in their own way, right? So that was our philosophy, that from day one, we knew that our solution is for enterprise. We knew that we have to respect their processes. So when we're designing our system or a platform, we take that into account. What that means, that our platform was completely modular. We don't say that, hey, this is take it or leave it kind of a thing. We said that, look, we have 1 to 10 solutions. We can start with 1 or 5 or 7 as you would like, and then either expand or scale back based on how would your need changes. Now, that gives them, one is the confidence to jump with us. The second is the trust that we are not here to take over or do something, and we respect their processes. And that trust, how you establish, of course, what Pushkar is delivering on the timeline, and also making sure that your and their interests are aligned.
Absolutely.
And once you build that trust, then I agree that once you get inside, then the good part of enterprises is that it's rarely happened that you have to scale back. It's only happened to that you expand. So if you start with 1, 5, and 10, you are sure that you will get 2, 3, 7, as long as you're delivering the right value to the system.
Absolutely. Delivering the right value and customer trust is of utmost importance. We all agree here. Pushkar, let me come back to you quickly. Let's transporters disrupting on-time delivery with last mile efficiency, almost a 30% improvement in timelines. Tell me, what's the secret sauce and how has it helped the business?
Honestly, the 30% reduction and 20% cost savings that we've been able to do is all because of insights that we heard from truck owners, right? During our conversations with truckers is where we realized they were wasting time, or, there was time which can potentially improve, which led to features such as routing, bidding mechanisms, looking at availability of inventory, because you would get as simple as an insight, sir, that, I want to have a tea break for 40-45 minutes, right? Now, traditionally, people would just allocate jobs to them. But with this simple insight, if you're able to kind of make your algorithms more smart, that circumvent those drivers during that time, you can start delivering on the services as well.
Tushar, coming to you quickly, SCEPS is being used by merchants, lenders and banks like you've told us earlier. But can you tell us about how your technology is uniquely focused on conversion as a metric and, why that is such a differentiator for this space?
To your point, the biggest differentiator which banks will create, who will be the early adopter, is the data which you will generate in this process, because the further growth will drive from how you use that data. That will increase the conversion, that every time consumer is selecting a product, can be in real time, give the right product which they can walk out.
All right. Noted, Tushar. Quickly, one final question to Rohit. You've got a portfolio comprising of startups in the fintech, edtech and SaaS domains. Rohit, do you feel we're at a stage where Indian companies can truly build for the world? What are the key trends in the enterprise tech segment today that you're seeing?
There is no doubt, I think, now left in this question. We as investors, and I think generally as an ecosystem, very, very confident that we will see more and more companies where Indian teams will be building world-class products. I think there are several examples of that already. Within our portfolio itself, I think Eruditus is a brilliant example. From day one, they have been global first and built again a world-class e-learning product there. SCEPS over here, Tushar, is focused on the US market. 100% of the business comes from there. And I think there is an inherent feature of the enterprise business, where you will see more and more companies becoming global anyways, because your enterprise clients tend to be global, right? And if you are doing a great job, right, as Tushar was mentioning, you can only expand with them. And over time, you will find that there is a lot of pressure on you to go global along with them, right? So this is a trend that we have seen time and again. And we are confident, that this is going to happen. All the, ingredients are already in place. The talent was always there. Now there is the know-how, the confidence. I think, the earlier success stories have paved the way for newer products, in the sense that corporate buyers across the world sitting anywhere know that they're going to see great products coming out of this country, right? So we believe that this trend is only going to increase.
Like you said, we have the talent, we have the know-how, so we're truly ready to build for the world. Thank you, Rohit Sood, Tushar Srivastava and Pushkar Singh for that insightful discussion. With that, it's a wrap on this special episode of Building It Up with Bertelsmann. Many thanks for watching.